Hey, everybody, good afternoon. Welcome aboard. You have joined 12-Minute Trading. My name is Doc Severson. I'm joined here with Dave Lukas, and this is our last session of the year for 2024. Today is the 30th of December in 2024. So we're going to look at the markets. We've had a lot of activity going on the last few days. It looked like we were rallying. It looked like we were just going through a pullback, and then Friday came along and this morning came along, and it's been an interesting market. So what we're going to talk about is whether we think this is the end of the beginning or the beginning of the end, right? So it's going to be one of the two, and we're not sure, but we'll talk to you about what we're going to look for over the course of the next few days to better understand how we should be positioned as we go into 2025. Dave, what are you seeing out there, man?
The best thing would be if you could pull up like a daily chart while I talk a little bit on the S&P 500, on the SPX. I think that's something that will help illustrate what I'm about to share. So,
Uh,
so
do,
the
do
the
you
S
do you
the
want the
SPX,
Bollingers on there? I'll get you
you
the.
can throw that on there if you want. Yeah, that'd be fine. The SPX was down again, a massive amount this morning, right? It was, down almost 100 handles and all that stuff again. Like it was Friday. Friday, we did a decent rebound at the end of the day, right at the end of the day, where it got bought back up some. We got that earlier today. And that's important to see. I think what we are seeing, at least my opinion is that what we're seeing is people locking in gains, tax loss harvesting in a good year as of right now. The overall bull trend hasn't changed yet, but I think it's very, very important if you're looking at like a daily chart on the SPX. Um, the last couple, well, the last few moves, what we've seen is we've gotten really close to a lower high, and the question becomes, right at it. See how we're just like right at that previous low? You could say we undercut it by a little bit, right? Um, right there, where we touched the Bollinger Band. Well, then you look at, we pop back up, we now put in a lower high as of now. Now that's typically a signal for changing the character of a market. Now, daily chart short term, right? Is this the overall major character change? No, but that's certainly something that is glaring on these charts. Now, again, it could just be the end of the year, tax loss harvesting, that sort of thing happening. A little bit different, not what you'd expect in Santa Claus Rally. I certainly wasn't positioned for the move on Friday and today, and I've had to make some moves on I've got thankfully only just a few trades on going to the end of the year, but typically you're not going to see this type of movement. This reminds me, Doc, and you can analyze this, of 2022 all over again. As we failed the Santa Claus Rally, had a really rough January into February, but we'll have to see, right? No time is ever the same. Now, the bigger thing is looking at the weekly too, in the weekly charts. I've been saying that 5,800 level, which is that, yeah, and sorry, Mickey, go back on the other one, but go back to the Bollinger Band. So if you look at the weekly, remember this bull trend, that moving average is what really is a great indicator on whether a bull trend is going to continue or not. You can see since this trend started, you know, we've come down, we've touched that weekly moving average, but and even undercut it, but we've been able to stay above it. We're flirting with that again. So is this just another, kind of get down into that range and then, nice rally bounce and keep going? Or do we break through that and then we start to actually see a bigger change in character too? If we did that, it'd be more towards a bear, at least a 10 to 20% correction. And so that's the key level I'm watching. It's right there around that 5,800 level. And so you've got the daily chart giving you a little bit of a, okay, all right, maybe this is the beginning. You got a weekly chart that's flirting with the level. It was, flirting very closely this morning. We'll see how the day ends, right? And those are the key things I'm watching right now. I think Thursday, Friday could be completely different days. It's a new year, right? Traders are back and all that. These are low volume weeks. Again, you got algos doing a lot of the trading right now and stuff like that. So, it's hard to say that we're having the change yet, but this is the key things I think to pay attention to right now. So, Doc, your thoughts on that? Go ahead, and then I know you want to share a couple other things.
Well, the one thing I want to show is the thing that I think is most recent in people's minds is the move from 2021 into 2022. So 2021, if you look at this, if you just bring this over, let's see if I can do this. Let's bring it up right to the end of the year, right? So 2021 was an outstanding year. So we had similar move here. We hammered off the bottom. We went into all-time highs at that point, and then we flagged out at this point. I believe that everybody was set up to expect this to break to the upside. And instead, what happened was we went one day into the new year, and then all of a sudden, boom.
Huge.
It was, I don't recall anybody being set up correctly for this. And so I'm wondering, and this was especially bad because we set up, this is what we talk about avoiding, which is the lower high, lower low. This is a change in polarity to the downside, right? So this was a massive bull trap right there. It trapped everybody thinking, oh, it's just another pullback, just like this one, and just like this one, and like this one. We've been in pullbacks for the previous 2 years, and all of a sudden, boom, everybody wants to get out.
Mm-hmm.
And I believe that happened because the game had changed and people sniffed out the fact that more than likely the Fed was going to be looking at raising rates. And they did shortly after that. They started the rate tightening cycle and everybody wanted off. And so if you compare that versus where we are today, it's much more mild. You look at this and you're like, well, what's the big deal here? Well, what we always are concerned about is, anytime we break the pattern. So far, this is like an equal low to me.
Mm-hmm.
I know that there's a lot of people out there going, oh my God, it's a head and shoulders. It's a head and shoulders. This thing is going to come down to here, measure, move. And that could happen. I don't know. We're not privileged enough to know what the future lies. But what we're looking at right now is more of kind of like a Darvis box, because now we have a local high, we do have a local low, but today is printing the more important local low. Now, depending on where this flushes out, so we could actually just be doing something like this, just setting up a triangle here. Now, I wouldn't sleep on the triangle, because what I've noticed lately, and this goes back a long time, when everybody sees that triangle, everybody's expecting this move to break from here. And a lot of times what I will see from here is the initial move down, and then you get the slingshot. So I think both Dave and I are saying that I don't think the pattern's quite done yet. This is not quite what we have noticed. We haven't really seen this thing set up correctly to start distributing to the downside. There's usually at least one more nasty push to the upside that wipes everybody out, that just goes short in this area. And that's what's missing from this market right now, is kind of like that one, follow the leader, get everybody to chase into this.
You got to get all the fear out of the market. That
Right.
VIX needs to be on the floor, and it needs to be like, just there's everybody's on board, and this thing is going to the moon. And we had some of that coming into December with the way crypto was going, and we hit 106,000 on Bitcoin and stuff, but it's not enough. I think Bitcoin had gone to, like, if we were up to like 120 and this market was rocking to like 6,300 right now and stuff, I'd really be like, okay guys, as we get into January, look out, right? Because the bigger issue, have you guys thought about or wondered, like, why is the Fed cutting rates if things are so good? Like, the Fed's cut 100 basis points. Now, the long end of the curve, which the Fed doesn't control, is up 100 basis points, like on the 10-year. But why is the Fed cutting rates? Why are they cutting short-term rates? Well, if you've been paying any attention, Janet Yellen just came out and said, "Oh, yeah, we spent too much. We got a lot of debt that's rolling over, $7 trillion, right? We got a debt ceiling coming up and everything else." Well, a lot of what Yellen was doing was using a lot of short-term debt. She's using a lot of short-term treasuries and stuff like that, which the Fed has control over the interest rates when they make their adjustments to the interest rates on. And so all this debt that they weren't doing long end of the curve debt because they knew they can't afford it, right? So they're doing the short end, and now the Fed's pulling rates down short end because that's all starting to come due, and it's all going to have to be refinanced. And if you're going to refinance it, you want to refinance at cheaper rates, right? And so remember this, and this is the danger lurking in 2025. If you guys have been watching us for in the better part of this year, I've been saying since really summertime that I thought 2025 was going to be a rougher year, right? And the reason being is that this stuff is all coming to an head. And so you've got all of this, and remember the bond market, the US bond market is the biggest market in the world. It dwarfs the stock market. It's the biggest bond market in the world and the biggest market in the world. And Doc, you answer this question. When push comes to shove, will the Fed and Treasury tank stocks to save the bond market?
No, they're always going to work through the bond market.
Right. So
Bond
they
market always
will,
wins.
the bond market's going to win, and they will do whatever they can to make sure the bond market stays afloat versus stocks. And so they don't care if they have to crash stocks to get enough fear so people pile in to bonds and bring the price down in bonds, they'll do it. They don't that's not anything that they're worried about doing. So and it's happened before, right? And so fear on a big scale is what helps them because if a bunch of people pile into the 10-year, guess what happens to the interest rate on the 10-year? Bond price goes up, interest rate goes down, and now you've got lower interest rates for refinancing your debt with. That's my biggest thing going into this year is that going to happen in some way, shape, or form? Now we've got a new president taking over. We got new, treasury and all that. But is the damage already done? It's just going to have to be dealt with, right? So that's kind of the thing that's lurking in the back of my mind is like, does the bond market cause the fact that we've got to have a nasty time in the stock market to get those bond rates down and everything else, right? So something to think about.
Yeah, one thing I want to talk to you guys about here, and by the way, if there's any questions, please let us know. We're going to be here for another maybe 15 minutes or so. So if you got something on your mind, go ahead and chat us in the chat room. So the one thing that we're always looking for is we have quiet and trending markets. So when we're pulling back, it's all very normal. We did get an exciting election, pulled back to a higher low, and then it normalized from here and went sideways. So this is what's called quiet and trending behavior. So relatively low implied volatility. I believe the IV percentile was down about like 10 when we were up here. So that meant that only 10% of the past year had a lower implied volatility figure. So that's usually fairly low. And then all of a sudden we went up to, I think 50 or 60% with this move. Right. So we've noticed that when markets change their stripes, when they go from, quiet and trending like this, all of a sudden there's what changes things is a shot over the bow. And we've seen this time after time where all of a sudden something changes and then people say, all right, it's changing. I want out now. When in doubt, palms out, which is the old floor trader symbol of sell. So if we see this continue to bash around like this, then there's one of two things that happens from this. Either we see it break higher and then the implied volatility drops down again. We resume the former trend and, all's good again. Everybody's happy because things are quiet and trending again. Or what we see is what happened in 2022, where we just see the volatility expand like this. So this can be a very difficult area to handle for a lot of people, because just when you think you know what's going on, all of a sudden the floor drops out, right? We get this trapdoor market where it just gets, where all of a sudden when everybody decides they want to learn how to short,
Mhm.
it gets squeezed to the upside, and then when everybody says, okay, we're heading higher, all of a sudden the bottom drops out. That is what corrective markets do. Corrective markets are very difficult to trade. You got to be in it to win it. You can't decide halfway through the move, okay, I'm going to short or I'm going to go long on this, because you're too late. So
Yeah,
yeah,
the
that's what we're talking about here, is that this is what's on line for the next couple of months.
and there's no clear edge right now or after the last few days. I mean, the market was going, you guys know it, you could feel it too, right? So, like last week on Tuesday, Christmas Eve, when markets started really running, you got that. We were on here Monday. We said look for a big move, like 50 points in the S&P to the upside, right? Kicking off the rally. We got that. Things were looking real good. I think both you and I, like even going into Friday, I expected it to be a pretty subdued day, swivel chair day, and just the market kind of to do nothing, right? And then the carnage started. And, some of that's algos, right? Somebody starts selling out, all the algos jump on board, and it exacerbates it and stuff on a low volume week. And then seeing the continuation today, like there's no clear edge in this market right now. And there's no point to put, like I told my students, I was going to put on new trades at the end of last week. I came in Friday and said, there's no point. Let's see where this thing shakes out. Maybe it's a couple day wonder, tax loss harvesting, that sort of thing, or maybe it's something more sinister, but let's let the price tell us. And right now, like, where's the edge? Where's the position to sell at right now? You don't know what's going to happen tomorrow with this, with the SPX. It could drop another 100 points again. And so it needs to really prove it's found support or a bottom here and reverses. I will say this, the longer we go like this, right, and don't break to the upside, the better the chance that this thing really goes to the downside. And you may be right in that we get that spike out of there that rolls over. And the reason I would say that is maybe some of these big players come back in beginning of the year, run it up a little bit for the first week or two, and then take the gains right before the debt ceiling stuff starts to happen. There's that potential. But I just think wait for the edge. Don't be like if you got money sitting on the sideline, I'm mostly almost all in cash right now. Like I cleared out most of my stuff before I traveled and locked in gains and did all that stuff. There is no point to put money to work right now without that edge, right? So just keep that in mind. Don't trade to trade. Just because you have money sitting there doesn't mean you have to do anything. In fact, some of the best trades you take are the ones you're most patient for. So go ahead, Doc. I know you have
So
another thing.
yeah, no, we had a question here about Bitcoin, so I'm just going to bring
Yeah.
this up here. So what's interesting about Bitcoin? We had this consolidation, and from the breakout, and then it looked like the train was leaving the station, and everybody was piling in here. And this is the dangerous part, because the problem here is, and this is why we have what I believe to be a little bit of an edge, is because we looked at the weekly chart and we said, oh my gosh, this thing is in utter exhaustion. Don't you dare go long up here. Wait for a pullback,
Yeah.
selling puts down here. And then with the latest IBIT and BITO options, this is a great trade now to be selling puts against this. So
Mm-hmm.
in about 2 weeks, this is going to be fully charged up again and ready to go. But meanwhile, everybody that jumped on board here up at 104, 105, 108 is in utter pain right now. Now, the thing I like about this is that this level of support is holding really well, including a lower low today. So this is the old, former resistance becomes new support, support, like bang, bang, bang. Now, if this does fail, then we're going to have an air pocket, because candles like this do not create support and resistance. And the way that I can see that is through volume profile. So volume profile shows you where all the price action is happening. And you can see that there's a big air pocket down here. Now, if the price does get down to this level, it may fall down here like within the space of an hour or two. because there's going to be no open bids down here. People are going to be laying up at 77.5 with their orders for that, and that should. So if we do see something like this, where if it does fall down, it'll fall down quickly, but I think it'll quickly be bid back up again at that point, and that weekly chart's going to be fully charged up again. So
And there's a lot, that's a big level there at that 78,000, 75,000 range. That, it's a lot of the key players are watching. Remember, the biggest buyers of this now are MicroStrategy and BlackRock.
yeah,
So,
yeah, the ETFs are the biggest, and once this thing new highs is what gets everybody. So, these guys
mhm.
are smart enough that when we're running in new highs and you got retail chumping against us, this is the time to take profits and rescale back in. But not MicroStrategies. They're just like buy, buy, buy all the way through. That's incredible.
It's either going to end extremely poorly or it's going to be one of the greatest moves in business history.
I think it's going to be a little of both. I think it's going to be
Yeah.
a little of both. So here's MicroStrategy. This was what, we
It's
had.
pulled back 45% though. I mean, if you're
Yeah.
looking to sell against it, I mean,
The,
we're
the,
getting close. I don't think the energy is all the way down there on the daily chart yet, but we're
yeah,
getting
the,
closer.
the problem with MicroStrategy is that it's way ahead of the underlying instrument. So
Hmm.
that's always going. It's like when you see ETFs run away from crude oil and things like that. Eventually it's
Right.
going to catch up. It's going to come back in. And so Baja Pete, that's my current outlook for BTC. Is everything is still looking good. It's still trending to the upside. We may have a little bit of um, turmoil in the short term as we determine where support is. Right now it's at 92, but it could drop all the way down briefly to 77. MicroStrategy sold the $200 puts. Yeah. That's probably still a good trade. I mean, now you could probably drop down and sell them below 200. But wow, I
Yeah,
mean, the
I was
implied
just I was
volatility
just
is
looking at them. Actually, one of my trades fired, but I was just looking at them actually. At that. Look at I've said it before. Again, if you know what you're doing and can play leverage, MSTX is down in the 50s now. Great time to look at if you want to play MSTR, you think it's going to rebound. That's a solid play.
the only problem that you have to watch out with guys like this. If they're 2x long, they will
Hmm.
eventually revert to zero.
They, yep, there's a contango. You got to play it short term if you're going to do
Yeah,
it.
so do a short term, look for the swings on these things, and then if you do get put the stock, you can, look for a big swing up, sell calls against it, and call yourself out, and then do it again.
Yep. But yeah, I was just looking at some of these levels here
So this
on
is this is a
MSTR,
this
even
is
out to January. I mean, and depends on what you're trying to do. If you got like, if you want what the big boys do, these guys that have a ton of money. You even see it like with the Jeppy funds and all that stuff. All those guys, all those groups are doing is selling covered calls and like naked puts. But they're selling so far out of the money, they're picking up like a percent, couple percent. That's it. So like you can sell at levels on these stocks that are just, like very, very far out of the money. You're not going to make a ton percentage wise compared to your risk, right? But the chances of it getting there are so slim to none. You're guaranteed to make some money. So, selling 200s, on MSTR out to January right now, you're in that couple dollar range, right? But if you got a crap ton of money and you're like, hey, my goal is to make 5,000, dollars, you can do that very, very easily with these things. Um, so it's just a different way of looking at it. But going out, if you're looking at MSTR as a way to play Bitcoin, which is becoming more and more what it is, you go like halfway out through the year, you can sell at like, 150 and, 170 out to like July, you're making 10% on your money, you know, and you're owning it down there at that level if it comes down there. So, and certainly that's losing another half of what it's worth right now. So, look at it like a CD. You got 15 grand, you want to throw in a CD for the year, you can do it, make yourself about, for 6 months, make yourself about 10%. There's that opportunity with those high beta stocks like that, but they move. So I lost 45% in 1 month. So,
The crazy thing is like, as far as Bitcoin, like the old BITO, which is the futures based,
yep,
which is, I mean, they pay a dividend, but it's like, it's over $1.
ridiculous.
It's over $1 for the next dividend.
I know.
So it's
We
going to be,
play that. You and I play that.
and it's like, I'm just playing it up and down. My cost basis is 25 or 24, something like that. And it's just, okay, sometimes I'm in the money and I have to roll things out, and sometimes I'm out of the money and the stock's underwater, but then, I can buy puts against it when it's like super high value, buy puts against it, taking the dividend every month. And it's actually easy. This is probably the number one performing asset that I've had, with the exception of the SPX over the last year.
Yeah, I like to pick it up, and then I'll sell. I'll sell a covered call on it for the cycle, and then use that money to fund a put at like what the break even is, and then I'm kind of hedged, and I just sit there and collect that dividend. That thing's paying about a 50% return, just as of right now, to own it if you annualize it. So
Yeah, it's
pretty
crazy.
wild.
Crazy stuff. Crazy stuff. Okay. Any final questions for today? So we should be back next week. So don't forget that next week, on Thursday of next week, there's a day of mourning for Jimmy Carter. So they closed the markets. We haven't had this happen, I think, since the elder Bush died.
Yep.
And I don't know when that was. It was a few years ago. And before that, it was Jerry Ford. And, so it's Jimmy Carter. So we have another market holiday this month. So, make of it what you can in the market. We're going to get plenty of volatility, I think, in the next few weeks here, until the market figures out how this administration is going to go. Right now, there's just a tremendous amount of uncertainty. I think there was certainty that came to the market after the election, but that quickly evaporated. I mean, there's a honeymoon period after an election, like, okay, we have certainty now. And then all of a sudden it's like, oh, we've got the House can't even figure out what to do now. So,
well, the Fed changing its tune to hawkish threw the monkey wrench in it, because
that's all it took, though. That's all it took.
That's all. That's all it ever takes is one little thing, right? That's just to change. Again, market's a forward-looking instrument, guys. It's trading on the future. So anytime the future looks like it's going to change in any shape or form, it's going to move way ahead of it, right?
Yep.
And then when it's wrong, it's going to go back. It's going to get right back into it, right? So if Powell came out tomorrow and was like, "Hey, you know what? We're actually probably going to cut 3 or 4 times next year," all of a sudden the market would turn around, go back and run it again, right? So it's fickle that way, and that's just part of doing this thing, trading the markets. You just have to be prepared for those times when that happens.
That's exactly what happened at the end of 2018 and then the beginning of 2019, because Powell was like, I am going to cut rates and I can't wait, or I'm going to raise rates. That was this big deal, like back in 2018 at the end of, and the market's like, what are you doing? What, are you insane? And then the market started selling off and went down 20%. So it was actually a very quick little bear. And then he's like, never mind, strike that. I was just kidding. Psych, all that stuff. And then the market 2019 went straight up. So, which is one of the last times. That's Dave. That's one of the last times I saw that signal, where we had almost all declining stocks on a day. It was
tell them you saw that today. Less single digit advancers to decliners. Maybe we end real quick with that. We forgot to talk about that, because that's.
Let me show this here. Okay.
Yeah.
So this is a hard lock signal that I look for every day, and I only see it once in a while. Like 2018, we saw this on Christmas Eve. I went long on Christmas Eve. That turned out to be a great signal. We saw this back in 2020 a couple of times, and went long. Was a little bit painful for a day or two, but eventually they turn around. Anytime you have this, what I'm showing here is, this is the number of advancers minus decliners. And the greatest number of decliners that you could potentially have is 500. And today, this morning, we had 495. That means that out of 500 stocks, 495 of them were declining, and 5 were either flat or advancing. And that is an unsustainable number. Anytime this gets into the single digits, I'm automatically buying. Now, that's a catch the falling knife trade, so you may have a day or two of pain. You never know. You don't know exactly when this is going to bottom for sure. Like tomorrow, we could see this thing dump down and retest the lows again. So you got to do it with an instrument that you don't care about, and you can just put it on the sideline and say, you know, I'm gonna look for a 30% return on this. So we use vertical spreads, or we use shares of the SSO, something relatively cheap, and it's a great trade for us over time. So I see this very rarely. One of the last times I saw this was on Christmas Eve in 2018, and boom, big move right from there.
Yep.
Okay, guys. Well, thanks for joining us here at 12-Minute Trading today on the 30th. This is our last session. We will see you guys next year.
Next week.
From Dave and myself, we want to wish you guys a Happy New Year, and hope you guys learned something with us, and hope you join us next year.
Take care, guys. Have a safe and happy New Year.
Okay, thanks, everybody.